The costs of the international trade increased dramatically. It's the end of the Chinese miracle, of course. European banks are no longer making money, they are making compliance. The Russian problems would lead to the global recession. That's not true. The Western economists usually dramatically overstate the economic factor in the totalitarian regimes.
Today, our guest is a financial expert, investment guru, founder of Movchan Group investment management company, Andrei Movchan. Andrei, thank you for being here.
Thank you. I'm flattered with the proposition of the title of the expert.
But that's all true. If you don't mind, I would like to discuss with you the subjects you work with most: economics, finance, investment. The global economy is facing one of the biggest challenges since the Second World War. The military conflict between Russia and Ukraine intensified the negative impact of the pandemic and led to the increasing prices for food, supplies, electricity. The disruptions in the supply chain led to additional expenses. The growth of interest rates creates additional pressure on the overly indebted countries and households. So what could be the potential outcome of these trends?
Well, thank you for the question. I would allow myself not to agree with the definition of what you said. Since the World War II, the global economy had multiple crises. It would be right to say that the global economy lives in a crisis mode because the nature of the capitalist economy, the nature of the market economy is cyclical. Different factors affect the economy. Different events happen. We've had the crisis of the 50s. We had big turmoils in the 60s. We had the Korean War. We had the Vietnam War. We had the big crisis in the Middle East in the beginning of the 70s and the Iranian Revolution. And we had crisis in Argentina. We had the food supply crisis because of the Argentinian problems and the problems with the climate. We had the 80s with the Venezuela and Chinese problems and other stuff. We had 90s with the collapse of the Soviet Union. We had the end of the 90s with the collapse of the Thai baht and all the system of the currencies of the developing markets. And simultaneously, we had the Dotcom crisis and the recession in America. We had 2008, the credit crisis. We had 2014, the crisis in the prices of the hydrocarbons and the first Ukrainian war, if I may. Then we had 2016, 2017 turmoils, and that's not counting for the Balkanian wars and the Iraqi wars and problems with Iran, later problems with Iran and Falkland crisis and whatever you add to the picture. So what we now have, we have one of the minor crises we face going ahead. It coincided with the end of the pandemics and the remarkable consequences of the monetary failures through the pandemics, and it coincides with yet another regional war in Ukraine, and all these components of the picture give you a gloomy perspective. You see it in a scarlet tone rather than in a blue or a green one, but it doesn't mean that we deal with the global Armageddon and the global economy will fail that time. We see a moderate development of the inflation, no comparison to the inflation of the 70s or the 80s. We see the moderate increase in the hydrocarbons prices. And essentially, when we talk about the inflation, we always use the rear view mirror. The current inflation is the inflation which we saw in the year before. And going forward, all the forecasts are much more moderate. We have the forecast of about 4% in the United States and 5% in the European Union, which is quite okay given the increase in the rates, given the low unemployment rates, given the steady state of the economy generally. And we know the major factors of the inflation. We know that the inflation is majorly driven by the hydrocarbon prices, and hydrocarbon prices are driven, the growth in the hydrocarbon prices is driven mostly by the inability of the countries to increase the production at the same speed as the consumption increases, and the Russian crisis and the embargo which is imposed by the European countries adds to the picture. And obviously now it's a situation of a change, but the change is not that big, not that problematic for the global economy.
The annual inflation in the USA as of May reached 8.6%. The FRS has stopped the fighting against the highest inflation rate for the last 40 years and increased the benchmark interest rate to 1%. This is the most aggressive step taken since 2000. And just yesterday, another historic raise to 1.75%. The FRS hopes that the higher cost of mortgages, credit card loans, will slow down the expenses to control the inflation rates, but not to cause recession. However, many economists doubt that recession will be avoided. Which side do you agree with most here?
I would allow myself to disagree with all the sides, because we do not live in a paradigm where the recession and the inflation are two enemies fighting each other and one of them will win. The potential outcomes are many. What we see now is a very malicious combination of a non-monetary and monetary types of inflation. Everything started with a non-monetary type of the inflation caused by the scarcity of supply. And when the demand started to grow after the pandemic's crisis, the supply just didn't cope with the demand. Because of many reasons, and we've spoken about that last time, there are many reasons for the logistics failures and the supply failures in the world nowadays, and these reasons do not vanish as quickly as we expected them to do. And because of that, the inflation took pace and started to grow. And when we almost believed that the inflation passed its peak because the logistical problems started to resolve, we saw the second wave of the inflation, which was purely monetaristic. The inflation was caused by the enormous amounts of income received by the investors in the markets and added monies which were distributed to the public. And when the pandemic was almost over and the services came back and the sales started to grow and the economy was boosted, all the monies which were frozen through the pandemic came back to the market, generating the demand on top of the monies which were distributed through the pandemics. So these two different types of reasons for the inflation coincided and boosted the process so that the inflation became almost uncontrollable, although not very high. Again, we saw 45, 50 years ago, we saw double-digit figures, and these double-digit figures were quite sustainable. It was very hard to deal with them, and only the very strict and harsh monetary policies allowed the markets to win over the inflation. And today, the monetary measures can cool a bit the monetary part of the inflation, but if the non-monetary part persists, the inflation will stabilize at a level which is not satisfactory for the monetary systems and for the authorities anyway. They'll try, obviously, because they don't have other ways to deal with the inflation, they'll try to impose stricter monetary measures. You probably heard of the 0.75 percentage point further increase in the rate. In America, it's now 1.75. The English central bank responded with a 25 basis points increase. It immediately resulted in the fall of the pound against dollar. The pound is at its lows against the dollar now, which is in itself not normal as a situation. And then coming back to the inflation point, the financial authorities will fight the inflation by increasing the rates. The rates increase will result in the decrease in the consumption produced by the leverage. The consumer credits, the positions in the financial markets, the mortgages will suffer the deflation of the size of the aggregates. It is very hard to say how these measures will affect the inflation generally, because the inflation in the most parts comes from the hydrocarbons prices inflation and the food prices inflation, and these prices increases are non-monetary in their nature. So we can fight with the amount of mortgages given, we can fight with the amount of consumer credit outstanding in the market, but it's very hard to fight with the hydrocarbon prices if there is still the shortage of the supply. The good news is that we would not expect the shortage of supply to persist over the course of, say 1 year. So probably in 9 to 12 months, we'll see the significant surge in the supply, and the demand will be stable or even go down because of the recession, and the prices will go down inevitably. When the prices go down, it will affect all the inflation, and when the inflation goes down, with the authorities will probably cool down as well. The rate increase will halt. They will declare the victory in the war over inflation, and the situation will stabilize on the new levels. Again, it is very hard for the economists to predict the timing of the events, but pretty much in the course of 1 year, we should see something like that.
But in this case, could the forecast of the skeptics that predict the key interest rate of 3% become true?
I've seen nothing bad in 3% interest rate. We had such level of rates 10 years ago, and nobody complained. Having the GDP growth in a range of 3 to 4%, the interest rate of 3% and the inflation in a range of 4 to 5% will be very healthy for the economy. The economy will be boosted by the inflation, which is a bit higher than the rate, and the GDP growth will be satisfactory in terms of the speed of the growth of the economy.
To continue the topic of inflation, in May it reached record high 8.1% in EU, and in Estonia it was even more than 20%. Euro is getting closer to having the same exchange rate as the US dollar, and by 2023 can become even cheaper. Could you please provide your focus on the dynamics of growth of EU economy and its currency?
It is extremely hard and probably just bad to predict the currency movements, because generally the movements of the big currencies are dependent on so many factors at once, so that you cannot create a satisfactory model for that. And the interest rates differential is just one of the factors and not necessarily the most important one. So with that regard, the depreciation of euro was inevitable, and we could forecast that, and we forecasted that when we talked to our investors, and even before the COVID crisis, we knew that euro would cost pretty much as $1 per euro, maybe a little bit more. But going forward, it's very hard to say whether the fluctuations of euro would be positive or negative in the nearest future. With regards to the inflation and the economy in Europe, the growth in Europe is endangered. I would say that we may see the recession or the zero growth for the time being. I do not want to forecast things which are very hard to forecast. The difference between minus 0.5% and 0.5% in terms of the GDP growth is mostly the methodological difference, right? It depends on how you calculate that, how you assess the figures. With that regard, I would say that the growth will be very slow or negative. The economic problems of Europe are massive, and we know that for many years, and we will live with that for many years to come. The good news about European economy is that European economy is big enough. The GDP per capita on average in the European Union is to the north of $30,000 per year. And with that level of the GDP, you may allow yourself not to grow. The same thing for the United Kingdom. Here the GDP per capita is even bigger. And the United Kingdom probably faces the recession already, and that's why the monetary policy of the central bank of the United Kingdom is that accurate, and that's why the pound is so cheap now. I have no predictions with regards to the long term. It's very hard to say how the economies would evolve. Most probably Europe will sustain the low speed of the growth or the zero speed of the growth for long. Europe's facing so-called Japanese scenario. The United States are more or less immune from that scenario. They can afford increasing the rates and building the tougher monetary policy, and at the same time enjoy the economic growth. And again, it's very hard to say whether they will get the recession next period or not. They well may, but we can recall that since the millennium, the United States had 3 recessions, and literally nobody died, and the economy didn't turn upside down. The recessions are a normal part of the economic cycle. So in that regard, I would expect a slower growth to the recession in the developed world, lower in inflation, higher, increasing the interest rates, and the stabilization of the picture in about 12 months.
So nothing awful.
Well, you never know. We've just got the pandemics. We now have a war in Europe, and we don't know what comes next. But given all the circumstances available to us now, I wouldn't expect anything awful.
One of the main topics for discussion of Davos Forum was logistics and disruption of the supply chains caused by the pandemic, zero COVID campaign from the Chinese authorities, war in Ukraine, and the sanctions. Do you share concerns of the world financial elites and governments in this regard?
No, well, it would be very strange not to do that, because we know that the disruptions of logistics were the prime factor behind the inflation, and obviously it is the prime factor behind the potential recession in the world. The costs of the international trade increased dramatically. They are still much lower than they were 20 years ago. But on the scale of the harsher competition between the companies and lower margins, it is sensible. It is very important for the global economy to have lower costs of the international trade. With the logistical problems, with the individual problems with the workforce appeared to be much less elastic than we all expected. Now, almost all the companies in the United Kingdom, for example, lack personnel, and they're trying to hire, and they cannot fulfill all their vacancies. And at the same time, the wages, the price for the personnel increased dramatically, and the demands from the personnel for the wages increased dramatically. We see how the strikes scatter the European landscape. The same thing happens in the United States of America, where the unemployment is very low. It's probably the lowest level of unemployment since the Korean War. And at the same time, everybody's trying to hire. And the hard logistics, the vehicles, the vessels, they do not work as they should work, because it's much easier to conserve the vehicle than to redeploy the vehicle for the work. So we have to live with that for quite a while. We'll see the logistics improving, despite the fact that there are many interruptions in the logistics, primarily in Europe, because of the war, because of the Ukrainian war. The war will be over time. The problems would be over time. Again, I hesitate to give you the forecast with regards to the timing, but in the years to come, we'll see the problems resolved.
Thank you for giving this insight. And in my question, I've touched China. So in late May, The Economist published an article how Xi Jinping is damaging China's economy. It tells the Chinese leader put himself in a difficult situation right before the party convention where he is supposed to be re-elected for the 3rd time. And his policy of zero tolerance to COVID and ideological battle for the remaking of the state capitalism can slow down the economic growth and make China less predictable. What, in your eyes, is the future of China and its role in the global economy?
I would start with stating the fact that the Western economists usually dramatically overstate the economic factor in the totalitarian regimes. None of the totalitarian regimes fell because of the economic difficulties. They all fall because of the problems with the elite, because of the arguments between the leaders there, because of the weakness of the totalitarian control.
Probably unfair distribution of resources among those elites.
Unfair distribution among the elites, not among the people, right? And Xi Jinping is doing what he has to do to secure his power. He's strengthening the political structure at the expense of the economical structure, at the expense of the economy. We see it in the decrease of the GDP growth. And that's the discussion about the China has very long roots in time. I remember we've discussed it pretty intensely with Sergei Guriev about 10 years ago, when I was talking about the glass ceiling of the Chinese economy. I was saying that the economy of that type cannot grow forever at the same speed, that their maximum speed of growth is about $600, $700 per capita per year. And the fact that their growth rate in percentage points is slowly decreasing just reflects the fact that it is stable in the real dollars. And now we see that. The economy grew almost twofold in the last 20 years, and now the growth speed is one half of what it was. And after the COVID and after Xi Jinping decided to sacrifice part of the economic advances for the political advances, the speed of the Chinese growth is now closer to 3%, which is comparable in percentage points to the growth of the United States. And we have to admit that the United States, with the GDP per capita being about 5.5 times bigger than in China, now grows much faster than China in terms of the dollars per capita. So it's the end of the Chinese miracle, of course. China is a normal authoritarian country with the normal authoritarian country's limitations to growth. And we most probably will see China stagnating in 5 to 10 years' time, if nothing happens, of course. If, for example, the change in the energy supply routes, the transfer to the new energy channels would be a great benefit to China, because China is the owner of the stocks of the rare metals and most of the materials used in the new energy sources. With that regard, China can become very beneficial as a resource-rich country, as opposed to now when China is the resource importer and suffers from the high prices of hydrocarbons in particular. So not talking about that, because we don't know the future with regards to that. If all the trends will continue, China would most probably start stagnating in a few years. And the political situation in China will become less stable because there is enormous free private capital disseminated in China, which can finance the opposition, which can finance the elitarian discussions and disputes, and we'll see interesting things in China in the coming 15 years. I'm absolutely sure. And then there is obviously a very big danger out of China. This danger is called Taiwan. And if, for example, Xi Jinping decides to cover his mistakes and solve his political problems by unifying the country, by uniting the country, in an effort to conquer Taiwan by force, it will be an ideal storm for the global economy. And it is very hard even to predict the consequences of such event.
I would agree. And also, I would like to ask you, did Sergei Guriev agree with your opinion 10 years ago?
No, well, it was a remarkable conversation when he was telling me that 6% growth of China will inevitably lead China to overtake the United States in the course of about 30 to 40 years. And my argument was that 60% would have done that if China had maintained 6% growth, but China would never do that, would never be able to do that. And the reality shows that I was, let's say, more right than Sergei at that time.
So let's move to the United Kingdom. I read in an article saying that pandemic prompted a surge for people to move out of city centers in favor of lower cost and greener areas, as they don't work in the office as much or quit their jobs, which increases the demand of office spaces in smaller towns. Do you consider this trend global and lasting long?
I'm not sure the trend really exists. Obviously, many people wanted to get out of towns to live on the countryside. But then when we talk about Great Britain and London in particular, We may suspect that many office workers wanted to leave the offices and work from the outskirts of London, but we do not see it in reality. We see people in the city working in the offices. We see the pubs on the Friday nights being busy as usual now. We see the prices of the real estate in the center of London surging, as opposed to the hypothesis that everybody wants to leave London and live somewhere else. So obviously the demand for the countryside real estate increased, but the most part of that demand was the demand for the second houses. When rich people from all over the world who accumulated in London, and more so through the pandemics, they wanted to have the London residents at the same time the country residents to be more free. And I don't think everybody even completed their purposes and their desires. The pandemics was very short, and now there are no restrictions in London, and people walk the streets. Oxford Street is as crowded as it was before the pandemics, and the food demand, for example, the consumption of food in London is now at the levels higher than it was prior to the pandemics, which indirectly suggests that there are even more mouths eating food in London than it was before.
This is probably another trend when everybody is getting back to the offices as it was before the pandemic.
People are getting back to the offices, people are getting back to streets, people do not want to cook at home anymore because they've sitting at home for many months. So it all contributes to the demand for the retail space and the office space in London. And well, I theoretically agree with the idea that people would, with all this development of the media channels and the ability to work remotely, people would love to move out the big cities. But I do not have the evidence of that.
Let's move to Russia's topic. The GDP of Russia makes less than 2% from the global GDP. However, the attempt to reject the Russia from the global lines of production could turn into a worldwide recession. Why does the multiplication of the impact exist in this particular case?
It's a very nice question. Thank you for asking that. First, some practical remarks. The Russian GDP is now not exceeding 1% of the global GDP. So it lost its share dramatically. The second thing I wouldn't agree entirely with is that the Russian problems would lead to the global recession. That's not true. First of all, there is no such notion as a global recession. There is no recession in the Southern Africa, for example. There is no recession in Brazil, right? So when we talk about the recession now, we talk about the recession in Europe, in the United Kingdom, and the United States mostly. And on top of that, the major reason for that recession is not Russia, obviously. The prices for the hydrocarbons started to grow before the Russian invasion to Ukraine. The prices for grain and for corn started to grow before the Russian invasion into Ukraine. So the process is much more multifactorial and complicated, right? But even given that, there is a big mistake of comparing the GDP, which is generally a global profit of the economy, to the economic impact. You can produce very important things in very big quantities or whatever, or size or amount, depending on what you produce, and still your GDP would be very small because the margin is very low. That's what happens with the agricultural products, for example. The margin for the end agriculture production is very low. The share of the GDP of the agriculture in Russia is less than 3%, and Russia is not the most advanced country in the world. Still, when Russia gets out of the corn market or the grain market, it is very sensitive because Russia was responsible for about 15% of that international market. And obviously many countries were dependent on that. The general hydrocarbon generated GDP of the world, the direct GDP generated by the hydrocarbons production is about 3 to 4%, maybe 4.5% now with the new prices. But then everybody uses the hydrocarbons. You need the hydrocarbons to produce so many things and to move the vehicles, to heat and to produce energy and whatever. So it's not correct to compare the GDP figures and the importance of certain goods. And Russia is obviously a very important producer of the mineral resources, from nickel to oil, from gas to timber, from molybdenum and mercury to grain. And it's a big question to the world economic elites how they allowed an authoritarian and maybe we can say the totalitarian country to become a dominant producer and dominant supplier of the very sensitive goods to the world markets. But that's another question. We now face the fact Russia is an important part of the global supply chains, although the benefit for Russia out of that is very low.
Oleg Tinkov, a famous businessman, announced the suspension of his business activities in Russia. The question is pretty clear. What does the future hold for one of the most innovative banks in the world, Tinkoff? What could be the impact of the owner change?
I don't think really that there would be a very significant short-term impact. Oleg Tinkov was a very visionary person. He is a very visionary person. So he generally invented the model, together with McKinsey, he invented the model of the new consumer finance bank. It was a half step to the neobanks conception. And well, I was the CEO of a consumer finance bank at the time Oleg Tinkov was developing his bank, and I remember that first we underestimated the model dramatically. We didn't follow that model. We were much more traditional. And it resulted in Oleg Tinkov taking over all the traditional banks. All right? But now the model is in place, and the bank works, and the managers who implemented the model, they are still in place. The market niche is in place, and in the long term, in the short term, it will work. The question is that the technology is evolving. And the ideas are evolving, and the revolutionary technologies of the past are now either traditional or obsolete. And in 5 to 10 years' time, the technologies and the ideas behind the Tinkoff Bank would be either traditional or obsolete, as I said, and there would be now budget to innovate. Not only because Oleg Tinkov abandoned the business, but also because the Russian soil now, the Russian system now, is not fertile enough for the innovators. Many people leave. We know that about 15,000 millionaires left Russia shortly. And obviously the major IT people left Russia, the major managers and the major entrepreneurs dealing with the high-tech and deep tech and fintech stories left Russia recently. And there would be just nobody to get Tinkoff Bank up to the speed of the innovation.
The current exchange rate for Russian ruble does not reflect the real situation in the Russian economy. What could be its real cost on the exchange rate if central bank didn't take measures to force businesses to sell their currency earnings?
Well, the currency exchange rate never reflects the situation in the economy. The currency exchange rate is a figure, is a number, which is a result of many different processes, but not necessarily the economic ones. Russia is a striking example of that now because of the prohibition for the non-residents to trade Russian currency and inability of Russians to buy currency effectively and to deploy their currency reserves outside Russia. The rate is absolutely artificial. This rate reminds me of the Soviet Union dollar-ruble rate. It was like 75 kopecks per dollar, which did not reflect the rate of the black market, which was about 4 rubles per dollar to 6 rubles per dollar. And both rates didn't reflect anything, because you could not buy dollars and exchange them for the goods freely, neither in the black market nor in the real market. The same situation is today. We can use that figure for the very limited amount of operations with a very limited amount of currency now. Some people hugely benefit from the situation because they have the ruble revenues, they have the ability to exchange, and they have the ability to take their dollars out of Russia, and that's what they do now. Some people lose, mostly the people who are engaged in in exports and making dollars and spending rubles. This is the agricultural sector, first and foremost. This is the hydrocarbon sector and all the mineral resources sector. These are the companies who supply the IT solutions to the outer world. And obviously this will depress the sectors I just mentioned. And the central bank will deal with that somehow, because the central bank is now on top of the rate situation fully. They can manage the rate situation. They will not allow the rate to be that low for long. They most probably will attempt and successfully attempt to decrease the price of ruble. And dollar will go up. In order to balance the budget and the situation, they need the price of dollar for the internal purposes to be in a range of 65 to 75 rubles per dollar. If nothing major happens with the Russian economy in the coming months, if nothing major happens with the war and with the sanctions, we most probably will see the smooth migration of the rate into that region, unless the Central Bank of Russia somehow proves unable to provide for that. I do not know all the particularities and all the details of the operation of the Russian Central Bank now, but I cannot imagine such circumstances which would not allow Russian Central Bank to effectively control the rate in that region.
After all that's been said, I have a very simple question. Do sanctions work? Are there any other mechanisms of influence on economy that bring the desired result?
That's a big problem with the sanctions, because there are so many sanctions, and the ambitions behind the sanctions are so high, and the representation of the sanctions, the advertising, the marketing of the sanctions is so intense, and yet we do not know the final goal of the sanctions, what the sanctions have to achieve. If this is the change of the regime in Russia, it is just stupid to believe that the sanctions can do something like that, because all the sanctions in the world never resulted in the change of the regimes. Given the anti-Chinese sanctions, anti-Iraqi sanctions, anti-Venezuelan sanctions, anti-whoever sanctions, it never changed the regimes. If the sanctions were dedicated to crash the Russian economy, it wouldn't happen. We have a remarkable example of Iran with harsher sanctions and with weaker economy to start with, less mineral resources, a less educated population, less diversity in the resources. But still the Iranian economy persists. Yes, they lost part of the economy. Yes, their speed of growth is much lesser than that of the developed world and most of the developing countries. But the Iranian economy is still there, allowing them to produce nuclear weapons, allowing them to produce machinery, allowing them to feed the population, allowing them to supply the goods to the population. So it's just another illusion that sanctions can break such an economy into a havoc and a disaster. If the sanctions goal was to show the neglect and the attitudes towards the Russian actions, they obviously do that, and all the politicians in the world can now say that they've made their stand and their position is clear, and they sanctioned Russia as an enemy, as a bad guy. The problem is that the bad guy still continues to live. And we know from the history, and we know from the novels and from the TV series that the bad guys usually live bad, and they've accustomed to live bad. And Russia is accustomed to live bad and to be a poor country, a country of poor people, a country where the toilets of the 40% of the population are outside their dwellings, and the country with 30% of the school buildings not having their heatings and whatever. But it's no news, and Russia will continue to be that kind of the country with no or almost no change to the external policies or to militaristic potential. And that's the fact, and well, I just cannot I cannot get beyond that point. I do not know what else the sanctions can achieve. And obviously, in the long term, Russia will lag behind the developed world more and more, and the sanctions somehow help Russia lag behind, but it would not change the nature of the country, and generally would not decrease the threat the country spreads out. As we see with the terrorist threat throughout the world, the terrorists are not very sophisticated people. They do not possess very sophisticated weapons. Still, the terrorist threat is one of the major threats in the world. It was declared the major threat by President Bush 20 years ago, and since that time the threat did not decline. The Russian threat would not be very sophisticated, but it will persist.
So let's move into investment. After every market downturn, the crowd is looking for whom to blame for the losses and then tries to sue them. With so many stocks down 80 to 90%, such as Robinhood, the pickings are plentiful. But most security suits are settled, basically to pay lawyers to go away. But this cycle has something new, obsession with crypto. And the Federal Trade Commission reports that 46,000 people have reported losing 1 billion in crypto to scams since January 2021. Bitcoin is down more than 50% since its peak in 2021. Ethereum is down 65%, XRP 78%. And of course, the Luna token is down from over $100 on April to essentially zero. So is anyone liable?
Well, there is no answer to that question, because there are thousands, if not tens of thousands, of the dealers in the cryptocurrencies. And these people dealt with the cryptocurrencies in different ways. They had different agreements with their clients. They declared risks differently. And obviously, some of them should be liable, and some of them were in breach of the laws. I believe the majority of them were not, because people now, and specifically the brokers and dealers now, are very accurate with what they promise and what we do, and with the declarations they do. These are mostly clients who were under the illusion of the prosperity of the crypto world. And these clients, my experience shows that the clients rarely listen to the risk declarations. They have their inner beliefs, and they satisfy their inner beliefs through the confirmation bias. They listen only to the facts that support their theories. With that regard, I would suspect that the vast majority of the brokers and dealers and asset managers are generally innocent, law-wise, legally. Right? So they've warned their clients, they gave the declarations, they made the KYCs in a proper way, and so on. And of course, beneath that, there would be many of those who speculated on the client's beliefs and who essentially betrayed the client's trust.
And in terms of cryptocurrency markets, so for the first time since 2020, its capitalization has dropped below $1 trillion. What do you think? Is this not the bottom yet?
I do not know. The problem with the cryptocurrencies, as cryptocurrencies are the assets without the real part, without the real collateral behind that, is that they can have any price in the world. They can be infinitively expensive, and they can cost zero, as we see, and nothing in the world changes. And there is no mechanics for the rebalancing of that. So when we talk dollars, for example, there is about 30 trillion of dollars in the world, and about 300 trillion of the assets behind the United States economy. So with that regard, we know that every dollar can buy something, that can buy a piece of the United States economy. And if dollar goes down too much, people will use dollars to buy the assets. And the assets would go up in price, and the dollar will go up in price. So this is the self-balancing mechanics behind the real currencies, the real monies. And that's why, unless a country is a failed state, the currencies are pretty stable. You see, the Russian ruble is pretty stable anyway, right? Because many people can use it to buy bread and butter and real estate and whatever is possible to buy in Russia. With regards to the cryptocurrencies, there is no natural collateral The whole idea behind the cryptocurrency is the idea of the next fool, the person who will buy it at a higher price from you with no reason behind that price, exactly as you had no reason for the purchase beforehand, right? So with that regard, any forecast would be wrong. The whole cryptocurrencies world can blow up and can get down to zero as a big forgery, as a big scam, or can grow 10 times or 100 times, depending on how much spare money people have, how much money they need to employ, what are the rates and what are the opportunity costs and the abilities to employ, what is the advertising of the cryptocurrencies, what are the applications of the cryptocurrencies. As of today, we see that the only stable and effective application of the cryptocurrency is to launder money. So it's a kind of a currency for fraudsters, for the narco traffic, for the weapons traffic, arms traffic, for the black markets. Going forward, new applications can be invented, and whenever we see the new applications coming in the market, the price for certain cryptocurrencies may change dramatically.
In the first quarter of 2022, investment gurus Warren Buffett, Ray Dalio, and Michael Burry were noted for buying stocks related to the oil sector. They bought securities of oil producers or service companies. And this happened against the backdrop of a crisis in the energy system and the collapse of the previous 2 years' favorites, technology companies. CNN calls the securities of oil companies the new FANG, and oil is trading at $120 per barrel today. So is it too late to buy shares of oil companies?
Well, again, I don't know. It is very hard to predict the flows. There is a very multi-factor model in reality. One of the factors in the prices of the stocks generally is the refinance rate. The higher the refinance rate, the lower are the prices, obviously, because you cannot finance that much of the leverage, and the equity risk premium goes down immediately when the risk-free rate goes up. The other factor is the perception about the future returns, and the perception of the future returns is based on the perception of the future of the economy. If you believe that the demand for oil will grow, if your forecast is optimistic. If you believe that we face a recession and the demand for oil will not grow, that's another forecast and another revenues ahead. The third factor, which is also very important, is the scarcity of funding of the resources. If we believe that the investors are optimistic and they'll pour the resources into the markets, that's one story. If we don't believe that, if we believe that they'll push the funds towards the consumption edge, or they'll store them in a more secure place, it's another story, and then the shares would inevitably go down. So there are so many different factors affecting the situation that we simply do not know. I would rather say that with these oil prices and these prices of the oil generating companies, the moment is behind. It's quite late to buy, because we'll see the prices go down, we'll see the prices of the oil companies go down, I believe. Same applies to all the stocks in the market. I still believe that the bear market is new and will last for long. We'll see the markets going down more and more, and maybe behind the new year, maybe in 2023 as well. I'm generally pessimistic about the outright markets, about the bonds markets and the equities markets in the world. And even if oil stocks would prove defensive for the period, they would not avoid the general fate of the markets. If everything falls, everything falls. You can be better than the market, but it would not save you from the losses.
Okay. Can we expect a repeat of the dot-com crisis now, as the bubble of high expectations from internet stocks burst on March 10, 2000? By mid-April, the Nasdaq index lost more than 34% and returned to its pre-crisis value only at the end of 2015. So So how long can recovery take now?
I don't think the situation is similar. There are so many different factors again. The liquidity of the market is much higher. The monetary aggregates are much higher. The diversity of the stocks in the tech sector is much higher. The models behind them are much more sustainable, and the majority of these stocks have a good history of making returns and growing as companies, not as stocks themselves. The situation is much more healthy. It still doesn't mean that the prices will go up. I believe that the Nasdaq will go down, and maybe it'll go down as much as 20, 30, 40% more. The majority of the tech stocks are still overvalued to my mind. But it would not represent a crisis itself. It would not be a flash crash. It would not be a panic when investors lose everything. We would not see that many bubbles, that many bubble stories, that many companies with no real business and the ambition to have high valuations. And a sort of dot-com crisis is already here. You just said many stocks lost 80 to 90% of their value. Absolutely, the majority of them are the high-tech stocks. So it's not the general dot-com crisis, it's the selective dot-com crisis for those companies whose models were more dot-com-like. And more healthy companies, they sustain, they may lose as much as half of their value or 40% of their value, but they are going concerns, they persist in the market, and they'll continue to work.
The Turkish stock market in January-May 2022 showed the best dynamics in the world in terms of local currency. Bloomberg reported that a jump in inflation to nearly 70% and the government's suspension of interest rate hikes forced Turkish investors to invest in stocks of local companies to protect their savings from inflation. While foreign investors, in contrast, staged a massive sell-off of Turkish company stocks. To what extent do you think stocks can be a protective asset?
No, well, you just said that the increase in prices in the Turkish stock market was measured in the local currency. Measuring against dollar, for example, it would not be that, right? Well, it's much lower. It's not that interesting, and the market is quite slow, and the market is obviously inflated by the domestic inflows, and we can expect that the market would burst at some point in the near future. Answering to your question, the Turkish market is not a good example to discuss when we talk about the potential protection of the stock investments against inflation. Because Turkish market is an unstable market or a small country with a bad monetary policy. Talking about bigger markets, it generally depends on what kind of stocks you're talking about. There are defensive stocks, there are stocks that benefit from the inflation, specifically when you can pass on all the costs to the consumers. And you can do that when you are a price maker. You can do it when your good is scarce and the demand is high. And obviously inflation is very bad for the stocks that cannot do that. If you are a producer in a big market where everybody is producing, where there's a high competition and the margins are low, your cost increases much earlier than the price for your goods increase. And bigger companies and stronger companies and less smart companies can sustain the old prices and operate at a loss in order to win the market share. And if you're a smaller company, if you do not operate in such a way, you just cannot do that. And you increase the price, you lose your market share, you lose your revenues, and you lose your capitalization. With that regard, I would not consider stocks generally to be a good protector against inflation. I know the roots of that legend, essentially, that idea. When you have a healthy inflation boosts consumption. In the boosted consumption, the companies producing consumer goods flourish because they sell more. If they sell more, their revenues increase, and if their revenues increase, their valuation increases. And so again, if you have healthy inflation, which boosts the economy, the stocks grow, but that's not because of the inflation. That's because of the growth of the economy. And the growth of the economy is only, the sustainable growth of the economy is only possible in a healthy inflation. If you have an unhealthy inflation, as we all know with regards to the many examples, starting with Russia in the 90s, for example, if there is an unhealthy inflation, there is no growth of the economy, and the stocks do not grow.
At the end of April, Musk agreed to buy Twitter for $44 billion. On May 13, he announced the suspension of the purchase of the social network while he waits for the results of checking the number of fake and spam accounts. Following that announcement, Twitter shares fell 20% and pre-market trading. Recently, Twitter investors sued Musk, accusing him of manipulating the market to create favorable conditions for himself in the process of acquiring this company. So how should the investors respond to such events? And how might this behavior affect the future of Twitter and Tesla?
Well, again, I would segregate the company's future and the shares' future. Shares can go up and down, and the companies still exist, and they work, and they perform. And Tesla would definitely produce more cars, and Twitter will still be the most popular network for the professionals, exchanging short messages, and still most popular political and financial tool for the media interaction. With regards to the actions undertaken by Musk, it's not something new in the market. Almost all the acquisitions and mergers are accompanied by such kind of dances made by the bankers and the acquiring companies and the company which is being acquired. Sometimes the law disputes arise, and I do not have a statistics in hand to prove that certain parties of these disputes win. I believe the results are mixed, depending on the courts, depending on the situation, depending on the lawyer's quality, depending on the popularity of the positions and whatever. Musk definitely was manipulating the market. The question is, was it a permitted manipulation or not permitted manipulation? And that's what the Securities and Exchange Commission would rather decide. And the court will definitely, if there is a court trial, the court will listen to the Securities and Exchange Commission with that regard.
A viral video on TikTok made the Circle water bottle one of Walmart's best-selling products, boosting the company's capitalization to $1 billion in just a year. Virality, meme, celebrity presence factor today has much greater impact on the security quote than such fundamental factors as financial flows, revenue, etc. It is the beginning of a new era in investing. And will every self-respecting company have an Instagram star to inflate the value soon?
We've discussed that for many years already. It's no news. It started with it started hundreds of years ago. We know that marketing is becoming more and more important, and obviously more important than the analytics and research, because more and more people enter the market, and more laymen and not sophisticated investors are there, and they are much easier manipulated than before. And going forward, we'll see more of that to come. The media and the social media become more powerful. The herd effect becomes more strong and more important. The retail investors become more strong, and I can add to that, saying that not only the celebrities add to the point, but also the viral ideas and the fake ideas add to the point. Now we talk about the ESG ideas, the environmental, social, and government, and in the nutshell, the idea is very good, but its applications may be very different. you can easily accuse a company of not being environmental, and before the company manages to deny the accusation, the stocks would go down because the retail investors will take it as a truth. The same thing with the social thing and the governance thing. You remember probably the GameStop affair, right? When the company were losing its capitalization, and then the capitalization was skyrocketing, just because the influencers decided to mercy the company. They decided to save the company just for the sake of saving the old good company which people liked before. And then obviously it didn't last for long. Many people made money on that. The not sophisticated people lose much money on that. Unfortunately, with all my respect to the regulators, we have the over-regulated markets with no defense against these new threats. And because of that, and because the regulators are still trying to shoot in the direction where there is no enemy, not recognizing the new enemies of the markets, will have the worst times to come.
Speaking about regulators, according to the University of Chicago, which you are familiar with, today only 0.2% of the total amount of laundered money is detected. At the same time, according to various estimates, banks spend from $50 to $100 billion a year on anti-money laundering. On one hand, it's simply blatant inefficiency. On the other hand, to some extent, it's a deterrent. How do you think regulators could improve the situation, and should they?
Well, I'm proud to be a graduate of the Chicago University myself, and I cannot agree more with my fellow colleagues from the Chicago University, saying that the KYC and anti-money laundering and compliance procedures generally do not answer the purpose at all. It's a big, dramatic failure of the institutions to regulate the markets in that way. At the same time, it's very hard to deregulate back, because hundreds of thousands of people are engaged there, and you cannot just lay these people off. You cannot decrease the load of that, because it became the backbone of the banking business now. The banks, specifically the European banks, are no longer making money. They are making compliance. They are like a compliance bureaus, and whenever their capital comes to an end, the Central Bank of the European Union comes and gives the capital to the banks at the expense of the taxpayers. Talking about the flaws of the contemporary financial system is quite banal, right? We all know that it simply does not work in the way it should work. It's one of the last industries in the world which was not segmented vertically. It's still vertically integrated and working as one big system all through the stages of the collection of the deposits and the settlements and the lending things and the compliance business and whatever. And I do not know for sure why the regulators do not want to change the situation, most probably because the regulators are limited in terms of their ability to recognize the situation and innovate. The problem of the bureaucracy is a big problem, and it's not only in the banking system, it's all around the modern economies. The low speed of growth of the modern economies is in most part due to the artificial barriers to entry for the entrepreneurs, for the professionals, the barriers to develop the businesses, the barriers to serve the end clients and the industrial clients. And I'm not in a position to give the general, the global, the strategic advice to these institutions. I only can state that the changes are very necessary and very much past due.
I agree with you. In my opinion, it's just lack of motivation.
No, well, we know that the bureaucracy is only motivated by the increase of the bureaucracy. The real motivation for a person is to become an officer and to employ the subordinates. That's why the bureaucracy is in constant growth. And because it is in constant growth, it needs to provide for the more legislations, more instructions, more rules. And because it needs to provide more rules, the rules become more complicated and less efficient.
Let's touch tech topic. Robo-advisors are actively used for securities trading. It's not a surprise to anyone. A qualified specialist must pass a proficiency exam to work as a broker. And algorithm does the same job, but does not take the qualifying exam. If there is no corresponding requirement, do you think the claims of financial advisors are justified?
Well, it is a good question. I think the officials would tell you that the robo-advisors are being made by people who are qualified enough because they have the certificates. And it is necessary that the brokers who employ the robo-advisors, they employ as well the people with the certificates, and these people supervise the robots. So the robots are the creatures of the professional people. I'm not sure it is necessarily the case for all the situations. We know that many robo-advisors are being sold as an IT solution, not as an advisor. And people somehow employ these robots at home with no restrictions on the use of the information systems there. I'm not sure that the certification of the traders and brokers saves us from the fraud. I've worked in the industry for 30 years. I saw enormous amounts of fraud in the industry. 99% of the fraud was conducted by certificated people, by people who passed the exams successfully. So it doesn't help really. And many companies lived and produced enormous amounts of fraud quite successfully, being licensed and maintaining their licenses. And at the point where the licenses were withdrawn, all the harm was already there. And I saw many companies with their licenses withdrawn, despite the fact that there was no harm done. And many clients lost their businesses and lost their assets, lost fortunes because of the withdrawal of the licenses, not because of the harm being imposed by the brokers. So again, as all the bureaucratic systems, that system works quite poorly, and I would not expect that to work better in the future.
What technologies in investing will be a breakthrough in the next, let's say, 10 years? Which startups and investments and InvestTech are doing something non-trivial and new? Are there any game changers in your opinion?
I don't know, and if I knew, it would have been a breakthrough, right? It would have been something that I knew already. The major problem with the market, generally, if we fantasize about that, the major problem with the market is that the market is so multi-factor, and it is so hard to gather the real information that you cannot predict the market. Whatever you do, you can exploit a very low level of predictability in very particular cases, like we do with our mathematics-based strategies, where we try to predict the range of the market movement, not the direction of the movement. But generally, you do not have a model which employs thousands of factors and users benefits from the usage of the precise and in-time information. If somebody creates a system, spending millions, obviously, if not hundreds of millions of dollars, on creating a centralized prediction center for the markets, it may benefit from that, but the existence of such center would definitely change the markets. The markets would become much more stable, much less manipulative, much more predictable, and because of that, the games in the market would change dramatically.
Do you personally follow any InvestTech startups or companies?
Not really. I've seen thousands of companies which claim to be an InvestTech startup, promising a new special high-tech strategy which can deliver extra returns, abnormal returns. Out of these thousands, I saw a few prosper. Maybe a handful of these companies prosper. And they usually prosper not because their technology is that innovative or advanced, but either because they have a very heavy machinery and they are able to beat the competition by having very sophisticated systems and very expensive systems, or because they employ a very deep mathematical thinking and the ideas which are not accessible for a normal trader or normal financial manager. These are startups made by academicians with a very good mathematical background. And again, there are very few of them. I know, say, 5 successes in that field. I saw about the same number of the companies being successful for a period of time and then failing because of something, because of the logistical issues, because of the operational issues, because of the black swan in the market or whatever. So it is much harder to create a good investec than it seems to be.
In many developed countries, the value of real estate has increased by 1.5 times over the past 10 years. In some cases, for example, in Israel, the cost has risen by 345%, in Switzerland by 165%, and in Germany by 162%. How do you feel about investing in the real estate?
Well, again, when we talk about the price increases, we talk about the past. The common sense would suggest that the higher the price increase, the lower is the probability of the continuation of the price increase in the future. So what you said to me suggests that we should be very careful with the real estate as an asset class. Because if we dig a bit deeper, we'll see that the major factor behind the growth of the real estate prices is the increase in the mortgage, and the increase in the mortgage generally all over the world is generally due to the lower interest rates. We've lived in the era of the lower interest rates for about 40 years, maybe 35 years to be very precise, and that came to the end. Now we just entered the long period of the increasing interest rates, or at most stable interest rates, and the rates will be higher, definitely higher than the last 10 years. And in such circumstances, the situation with the real estate would be much less predictable than it was before. Obviously, there is a big factor behind the growth of the real estate prices. The factor is the non-monetary factor, which is the high barriers to entry in the construction industries and the bureaucratic obstacles to the construction and development, and the high cost of the development because of that. We know that in Great Britain, for example, there is a deficit of about 600,000 square meters, and the deficit is persisting. We know that in Israel, the deficit is dramatic. And the major reason for the deficit in Israel is that first, there are about 20 families controlling the whole industry, and it's an oligopoly. And then you can wait for the permission for the development for many years. Literally, some of the projects are waiting for like 15 years to get the permission. That's the very important factor. That factor will mitigate the drop in prices if other factors will suggest the prices should drop. But that's just one factor among the number of factors, and the other factors are negative now. With that regard, I would, again, hesitate to predict, but I would just say that the situation with the real estate is much more dangerous now than it was 10 years ago.
What do you exactly mean?
I mean the prices can go down. The probability of the prices of the real estate generally, index-wise, going down is now much higher than it was 10 years ago.
And how could governments help bridge the growing gap between the growth rate of real estate prices and the growth rate of wages?
Well, there is a simple solution, which is very bad, to subsidize, right? And we know that subsidizing just increases the problem in the future. And there is another way of doing that. You should ease the entry barriers. Here in London, if you want to build something, you need to obey very many rules. I'm now in process of rebuilding a house which I recently bought in London. I have 27 advisors in that, 27 different companies that I had to employ in order to get the permission to rebuild the house. I understand that many people make their living out of that, but generally it results in the inflated prices for the real estate. Outside London, it's very hard to receive the zoning permission, the planning permission for the new settlements, new developments. And if it was easier, it would have been easier to build more. It would have been easier to create more communications between the cities and between the centers, and the demand would probably be satisfied. And again, I never dealt with such a problem as a professional. I was never employed for providing recommendations to the officials with regards to the real estate, and I know many people who are much more proficient in the field and know much more what to do, and I can give you the details of these people and you can interview them.
The 500 wealthiest people in the world have lost a combined $1.4 trillion this year, including $206 billion on Monday alone, according to the Bloomberg, as global financial markets buckle under the weight of higher interest rates and inflation anxiety. Does the size of those losses tell us anything?
We do not know exactly whether they lost something or not, because they never realized their prior gains, right? They started with a certain price of their shares. Their shares grew over time. The S&P grew like threefold. The Nasdaq grew fivefold over the course of 10 years. And now the prices went down. But again, if you want to sell Tesla on a whole at its market price, you probably would fail. There would be no buyer. So I wouldn't tell about losses on gains here. There are accounting games. If you have one share of Tesla, you obviously become richer or poorer because of the change in the prices. But if you're Elon Musk, it doesn't concern you. You cannot measure your wealth in terms of the capitalization of the Tesla stocks.
Well, I want to finish with geopolitics, but I guess I know the answer based on your reply to my first question. We live in an incredibly interesting and challenging time. In addition to the obvious points of tension, as in Ukraine, there are several arcs of instability that could bring even more chaos and unpredictability to our lives. I'm referring to Turkey's growing ambitions, tension with Greece over islands in the agency, frequent local conflicts in Central Asia, the Armenian-Azerbaijani conflict, revanchist sentiment in Georgia, Chinese pressure on Taiwan, the weakening of American influence in the Gulf, and many others. So, are today's events really a turning point in the history?
Well, the history is cyclical, right? We had worse periods of time and we had better periods of time. It's obviously pity that all our illusions about the better world appeared not to be true, but that was of the illusions of people 120 years ago. In the beginning of the 20th century, many people and many politicians, many serious observers and analysts had an illusion that the world was deemed to prosper, and the global trade and the global security was at the enormous level. Yet we had the First World War and then the Second World War, which many people believe was just this First World War Part 2. And the world was devastated and in a house for about 60 years. We may well approach the turbulent period, which can last for decades. We definitely see that the mineral producers, the mineral resources producers, are the beneficiaries of the instability and the volatility. I can even expect that Russia will sponsor the problems in the world, sponsor the wars, sponsor the conflicts, because these conflicts increase the price for the mineral resources. We can well believe that China will change their external policies, which used to be very peaceful for a long period of time, and try to be more active in the world to substitute the economic shortcomings in the public opinion with the military victories or the foreign policies victories. Obviously, the situation in Ukraine will last over time and will not be resolved soon. We can suspect that Russian ambitions will then grow as much as Georgia. And once growing to Georgia, the Armenia would be the next obvious target. And once Armenia is the next obvious target, Azerbaijan would be a place of conflict between Turkey and Russia. We can expect that conflict, at least as a proxy war, to start in the recent years. And many other conflicts which you may name as well as I can. The conflict between Iran and Israel and Saudi Arabia. The war between Iran and Saudi Arabia is already in place in Yemen. And it can become more hostile and bigger. The world is not the safe place. Given the superposition of that and the economic problems and the change of the economic regime, in 5 years' time, we might reconsider your statement about the interesting times we lived 5 years before.
Okay, let's stay optimistic. Andrei, thank you very much for talking to Andersen.
Thank you very much indeed for your questions.
Thank you for watching. Please follow us on Andersen R&D YouTube channel.